Hello and welcome to Money Discourse. It's been another mental week. Have we hit peak inflation? CPI came in lower than expected, giving us a bit of breathing room. Is SBF the new Madoff? Crypto is under threat with FTX filing for bankruptcy, big tech getting smashed and making large layoffs. There's Tesla, Twitter, and much more. But first off, the best news is Raj is a daddy again to a baby girl. How does it feel?
Yeah, it feels great. It's been a long couple of weeks. Been staying away a bit from the market, trying to reassess the importance of life outside the market. So it's been a nice, just detaching a bit. And it just happened during that detaching is when everything was just hitting the fan. Like we had, so Amazon, looking back, Amazon hitting like 83 or something. Google was getting smashed. Microsoft was getting smashed. Apple low 130s. So it was a good time not to look at the whole portfolio and definitely not stress about it too much. Luckily, a lot of my option positions anyway are pretty defined risk, so there's not really much stress there. But my outright stock portfolio, yeah, that went through quite a bit. And then on top of all of that, we had all the crypto shenanigans this week, which is. Yeah, it's not been great. It's not been great at all. But the silver lining and all of that is that we saw the first real decent inflation print for the bulls. We came in 7.7% on the headline against a 7.9% expectation. We had the core also doing better as well, and so that. We had the most monumental rally. We had a 1,200 point move in the Dow. We had a almost 8% move in the Nasdaq. Like, when have you seen an 8% move in the Nasdaq? And then we had a huge move in the S&P, and that pretty much brought back 2 weeks worth of losses just on that. And then we saw follow through on Friday a bit as well. So we saw a lot of the crap that's been absolutely smashed, which happens to be a lot of my portfolio. That was all coming back. So it was good, but one bit of crap that's not coming back, it seems, is just FTT token, all the crypto, and what seems like the biggest Ponzi and biggest fraud out there from who was a darling that had Giselle on stage with all these bevy of women, had all the top brokerages and investment funds all in his corner. He had Kevin, what's his name, Mr. Wonderful, talking about how if there's one company he would trust, it's FTX. And just shows how the market just got the wool pulled over their head and just absolutely just manic. I mean, we're talking about, this is on par with Luna. I mean, Luna, that was the whole coin. This is customer funds. They've meddled with so much customer funds, using customer funds to trying to achieve their goal. When you hear more and more about the story, I mean, they're talking about this 2-bit operation in Bahamas. Like, I did a quick brief video about it this week, but then since then, just more and more stories coming out. Like with some 20-year-old running the shop, he's playing computer games while this is happening. I mean, bear in mind, $700 billion worth of crypto was moving hands on this exchange every day, allegedly, if that is even correct. And it's just unbelievable. And the thing is that, I've been a crypto believer, but when we keep on getting this scandal after scandal after scandal, I mean, we got Voyager going down, we've got Free AC Capital, now we've got FTX, we had Luna, $50 billion market cap coin. How can you confidently go, right, I've got a decent sized portfolio, I'm gonna, that's it, I'm going all in onto crypto. And I mean, I understand these guys, not your wallet, not your keys, put it in a cold storage, do this and that. But the thing is, you need a place to be able to transact. Like, you should not feel threatened to have your money on an exchange. And the thing is, now it makes you wonder, every other exchange out there, whether it be Binance, whether it be Kraken, Poloniex, or whichever one, what are they really doing? What do we really know? I mean, FTX, everyone thought, I mean, this is just a phenomenal exchange. He's, time, whatever, I don't know. You can't confidently say that your money is safe with any crypto exchange. I mean,
yeah, definitely. And when you look at Binance, they're saying, even though it's a 30 times larger exchange than FTX was, if Bitcoin starts going in the 10K range or sub 10K range, you can start seeing bankruptcies of all of these guys. Crypto.com.
I feel like a lot of people, the withdrawals are coming big and fast everywhere. So I mean, these operations work as long as there's confidence in the system, like with anything. And the thing is that with FTX, it was fraudulent from day. But the thing is, as long as they want to run on the brokerage, it could continue on the fraud. But when everyone wants to withdraw and you realize all your customer funds are just somewhere else, and it's tied to the price of crypto, and crypto keeps on going down. I mean, and then we always talk about the repercussions. We already saw Mercedes F1 team. They cut their ties with FTX, but they're fine. FTX signed a 19-year deal, I believe, naming rights with the Miami Heat Stadium. Well, that's gone, right? I mean, FTX was in there with all these sports teams. Tom Brady, Giselle. Now, look, I don't know if this is true, but the talk is that they had $650 million worth of their wealth in FTX. I don't know in what capacity and how, but you had Tom Brady, Giselle, huge investors of the project. Stephen Curry as well. I don't know how much these guys have all put in and what their exposure is, but I mean, they literally was like a worm, like a virus that literally got their hand into every single pie, whether it be the hedge funds, the VCs, the sports, the top investors, all the TV personalities, all the YouTube stars, like Millennial Money, Meet Kevin, like just to name a few, everyone. And it's none of their faults at all, but everyone's like, FTX, get your free, how many times have we heard it? How many of you all have listened to the pods? Get your free coin every time you make a trade, FTX. And just imagine.
Yeah, I know Tom Nash actually just made a video recently regarding his promotion of FTX. I think he only did it for about a month, but they were giving him $50,000 per month and it was a 1-year deal that he had, and he was like, look, I don't do too many promotions with anyone. I'm usually someone that's he's kind of got a slogan on his thing. It's like, don't click on anything, don't smash anything. I just listen to what I'm saying. Give me a few minutes. But he said, look, this was a time for me to kind of pay my kids' college tuition, but it only went on for a month and a bit, and for some reason he signed up 0 subscribers in that time. They cut the deal short after 1.5 months, but he still apologized. But the thing is, how do you know? It's a private company, so how can you really know? How can the average Joe who doesn't audit the company really trust what's going on in between? And there've been huge high-profile frauds going on. Enron is one, and these things happen, but unfortunately, it keeps on happening in this crypto space, and that's really hurting the
my
trust.
Portfolio.
Yeah.
My portfolio is hurting the trust. I mean, look, I'm not a big I don't have a big amount in crypto, but still, I'm not saying it's still a bit painful. And again, it's just that money. I've lost a lot, as everyone else, and it's just going to hurt. And it's just a shame because the amount it was being championed as the next best thing, inflation, deflation, all these exchanges just peppering our screens, even on the Super Bowl, everything, and it just turns out to be a big elaborate scam. And the thing is, I know not all of it is a scam, but enough of them are coming by the wayside where you're just getting some of these huge names like BlockFi. That's another one they're done. Voyager. That was I believe publicly traded. I've been trading crypto now for about 2 years. Obviously, I did actually even start off in 2017 with a little bit nibbles here and there, but I actually still to this day, and although there's been a lot of progress with everything that's happening, it still has not gone in any way mainstream at all, right? So I feel like that's the main savior that can really happen. If there's a real application for some of these things where it can actually go mainstream, where it comes as part of all of our daily lives. And with that, and when you really start seeing a use case, then that could be the resurrection of crypto to a relatively strong position. But as of now, it's still that promise of this is the next big thing. We had obviously the Ethereum merge, and although that was a big event, but it hasn't really changed anything. It's just the way that it's been, how it's mined. So it's not something that has actually changed in terms of how it can actually impact the general person in society. So this is my thing. I think again, there's a lot of diehard crypto people, but I think I'm losing faith with it quicker than anything. Like how much scandal can you keep on taking? And I mean, these are not little Turkish, like small companies in Turkey or something like that. This is FTX. I mean, they had an ad at the Super Bowl. They're just all over everywhere. They advertise all over the US sports teams. They sponsor the MLB referees. It's all over their shirts. I mean, this is something that's been entrenched in Western society as a reputable broker of choice. And it sort of escaped the scrutiny that any normal exchange or any normal company would go through. And somehow they managed to do that by getting into everybody's pockets, giving enough money to the right people. And this is the consequence.
Yeah. And if you want to get a bit more clarification from a kind of a crypto broker insider, I'd really recommend listening to the latest All In podcast where they have the CEO of Coinbase on, and he kind of details from his point of view what he believes happened. And at points he was questioning how FTX, were able to fund such huge aggressive marketing campaigns and where they were getting all the money from, and their ties with Almeida, and how they were seemingly printing money from the ether, really. So yeah, I really recommend that. But also something switching on to macro is on the same podcast, you kind of get Chamar's predictions. And well, first of all, he was talking about how that we've got a really great, positive bit of news last week. We've got inflation ticking down. However, their prediction is, we're going to have this double hump in inflation coming up. So it's kind of like going to go down and then come back up again. So maybe that might be in the December print or not. So Gordon Johnson was saying that the core PCE was down due to the CPI for health insurance being recalculated in a different way. And if you had it calculated in the way it was in the previous calculation, we would have stayed flat this month. And that would have taken us above expectations at 6.7 month over month. Another bullish point is obviously Judge in the US has cancelled the student loan relief. So that's kind of deflationary, and Ukraine not getting advanced tactical drones from the US, kind of forcing them to the table to negotiate, which obviously would be great. And also Ukraine taking back territory from Russia. But who knows if this is a good thing or bad? Will Russia retaliate even more? I don't know.
I also think another big potential inflationary aspect is China's sort of willingness to open up slightly. We've seen murmurings coming out from China that they are now allowing Westerners to use Western vaccines. Expats to use Western vaccines. They're looking at reopening a bit more, trying to go away from this zero COVID policy without really saying it. And so China's had quite the rally over the last couple of days as well after being in doldrums. We saw Baba getting down to below $60. That was ridiculous. The dog of the century. I remember I saw that earlier this year, like 112, but then I got back in again and then it's still a dog. And so I guess my beginning of the year prediction on K-Web has not, but although we've had K-Web actually went to a low of in the 17s, is now back at 24. So we've had a 40% increase in K-Web from the lows. It's been quite the rally in the Chinese stocks from the lows. So I think China, we saw crude getting a bump, getting back towards $90 on WTI. Brent went towards 100 as China. Bear in mind, we're having these high inflation prints with China on lockdown pretty much all this time. So with China opening up, that could be very inflationary as the demand comes back for a lot of, especially gas and oil and things like that. So that could also be it. But you know what? For the time being, for our battered portfolios, it was well-timed, and I'll take it. And that's all I care about. Come December, this has given me a chance. On Friday, I was just selling out little bits, like all the way up. Like we saw Nvidia at 112. It's now at 161. It's been epic rise. Perfect. And I went from being like 30% offside to like 20% onside, just been taking the profits. Just whittling down on AMD. Meta, I got caught in Meta, and that has been bad, but that's come off $25 from the lows as well. So all of these things has given me an opportunity to just cut down. And now I'm in a position, if we have a decent day on Monday as well, I'm in a position where I don't even care if it goes back down again. I'm ready to just load back in because my strategy has always been just skim on these big moves up. And when we have the type of move we've had over the last 2 days, it's a 2-week move in 2 days.
If you look at what Chamath was saying, is saying that most of this rally has kind of been short covering and not really new net buying from retail participants or institutions. And if that's the case, we're still going to maybe pop a bit. But his prediction is when the VIX comes down, into the early 20s, into the high teens, this pop can kind of reverse.
To be honest, before this, we saw tech, especially big tech. They were the last ones to go because, all of these other names were down 80%, 90%. But the big four, the big five had held up pretty well. And in the last couple of weeks, they were the last shoe to drop. And as I mentioned earlier in the pod, we saw some epic declines in the likes of Amazon, Microsoft, Meta, Tesla as well. Tesla is went to below 180. So all of these ones, and Meta particularly after that earnings, I have never seen a move. I mean, they were 135. Bear in mind, the high was like, I think above 300. So they were already down 60% from the high. And then they dropped another 30 odd percent to close that below 100 and then went down to 89. And the market right now there's been a lot of fat on a lot of these corporate names, and the market is rewarding cost cutting, streamlining, putting first profitability by, just skimming down all the fat on a lot of these companies. And I saw this one tweet that we saw that there's layoffs in 2022 as a percentage of workforce. Now, Twitter obviously is not publicly traded, but that's 50%, as Twitter is losing, I believe, 4 million a day, and it's trying to stop that hemorrhaging and taking away a lot of the stuff that is potentially not necessary, but we'll see how it all works out when it all plays out. So Intel cut 20% of the staff. Snapchat went to $7 after their earnings. It's now back at 11. So it's a 60% rise from the low. So again, that's a nice bounce back for Snap, but the market is seeing that they're doing what is necessary. Coinbase has shed 18%. Meta, after initially, what really sent down the stock following their earnings was their huge wage bill, their capex bill, their insistence to go after the metaverse route. And I think the market has forced their hand, and Zuckerberg has said, right, okay, we're going to be cutting about 13% of the staff. And as soon as they announced that, we've had a monumental rally in Meta. So it's just showing that regardless of what a company wants to do, the market is dictating what they have to do. And eventually these CEOs under pressure will adhere to what the market is wanting them to do. So that Meta, they had 88,000 employees, I believe. So they were taking away around 10,000 staff. And it was necessary to restore their share price. And now how it's peters out once everything's all settled, well, we'll find out. But again, Meta's always been a cash cow. They're printing money still. They're not growing, but they're still printing a ton of money, and they've got great free cash flow, and now cutting more staff. It's going to aid that. So Redfin as well. Credit Suisse still in just Credit Suisse, basically. That's not what I was to say. I'll leave it right there. Microsoft and Amazon, Apple hiring freeze. So this is how it's ended up right now, and this is where we stand. And so in terms of the Fed, and when you look at the job numbers, they're still so strong, even though we're seeing all of these cuts in a lot of tech, but job numbers are still so strong. It's unbelievable. And then the Fed, they're struggling in terms of trying to really slow down inflation, because the jobs numbers, employment, economy is at full employment right now, and this is just what it is.
And the problem is, when people say there's an inflation problem, it tends to beget more inflation. People and suppliers will get fearful and start pricing their goods higher, and then it all just trickles down the supply chain. So let's just hope that this print, even if it seems manufactured, to be honest, and at the end of it, when you look at who the boss of Jerome Powell is, it is Biden, because obviously he's the one that chooses the Fed chair. So at the end of the day, he does.
No, but if you think about it, remember, I've said this before, the comparables as month on month goes on, it will get better and better. And so you're not going to see an 8% inflation rise over peak used car prices. Naturally, it's going to go down. But like I've said before, the prices are still high. And so if we've got this extremely high price and it's still going up 3%, it's still 3% too high. We need deflation. Yeah. So we are going to see this number come down. And the market right now is not really reacting on, it's just what the Fed is doing. And the thing is, you want to just be on the side of the Fed. And so we saw the market react, because now there's a chance that the Fed might now taper off. And that's what the market wants to see. But we saw comments out of the Fed, and they still seem quite steadfast in saying one reading does not create, it's not, they need more confirmation that inflation is slowing before they deviate from their plan. And I think 4.5% is still the plan right now. But
there's memorings of the terminal rate being about 5.5%. That's what they're talking about. So
if that ends up happening, then there we go, back to 3,500 for the S&P. But I mean, if we just look at the actual chart, we actually had a nice double bottom, although we pierced it and we had that pin bar there. We saw that, but it got strongly rejected, that breakout to the low, and we ended up basically at the previous support line, which was back on November the 30th, which I guess was a bullish sign. And then we sort of bounced ever since that, and we had that little bit coming off, and we've broken up through that downward trend line. And I guess the next level, if we do keep on rallying, is getting around 41.50. That is where I'll be looking to get to before we might face some stickiness. But again, we talked last time. Do you think there's going to be a Santa Claus rally? Maybe this is the start. Maybe this is we're mid-November, and we can just sort of keep on going up higher towards this level. Maybe 42.50 towards the end of the year before next year the market chooses what to do again. But it does seem like we've formed a nice bottom here, a nice pattern there, So I would be looking up to 41.65. But again, if we get some adverse news, we're heading back towards the 3,700 mark.
Yeah. It is what it is. I mean, I've been absolutely killed. Obviously, a lot of my position is Tesla, and it seems to have been affected adversely because of the actions of our Lord and Savior Elon Musk. The thing is, he is still selling, it seems. Tesla went to sub 175 in pre-market, which is crazy. It was like 525 pre-split, 52-week lows. And, when you look at the actual company itself, it's doing phenomenal, but with growth of over, as Elon's saying, it's going to be around or just under 50% year on year. P ratio of 30 if you analyze this quarter's earnings. End of year run rate of around 40k cars, which is like annualize about 2 million. But Elon selling has negatively affected the stock price of between, I'd say, $30 to $50.
There's a big Elon premium on the stock as it is, and with him going to Twitter, just ruffling up so many feathers and this and that, it just doesn't help the stock.
Yeah,
like,
it doesn't.
The stock with this much cloud around it based on Elon's action, and he's really in Twitter right now, really just stirring things up, which is funny as a bystander, but as a holder, pissing off all these politicians, these senators, as these impersonated blue check guys come in and start doing this. Raytheon, all of this is really just hurting the Elon brand, even though Twitter's and the thing is that it's just not going to help Tesla. And the thing is that a lot of Elon premiums in there, and the more and more he keeps them going this way, I feel like it's going to be a big headwind on Tesla shares near term anyway.
100%. But, I found this really good thread from Energy Credit One talking about the capital structure of the Twitter deal. And Elon had about 13 billion in credit facilities, and 12.5 billion of those were likely funded at the close with a 500 million revolver. And if you look at that, he was paying just from April to close in October, it cost him 435 million per year in interest. And the total interest expense has been around 1.286 billion from today. So if you think about it, he's got a dog of a deal on Twitter, and just the financing itself is just absolutely crazy. And if you tie that in with the advertisers all pulling out, you can see how this has probably got really stressful for Elon. Him having to sell at these levels is probably hurting him as well, but it probably hurts him more than it hurts all of us shareholders. But wow. Or the TLDR at the bottom, you can see that this thread goes into all of the bits in there, but it's basically the cap structure is a mess. And especially if the Fed keeps raising rates, he's got a crazy interest expense, and he had to find a way out of it, and that's why he's selling. But and I think we had a bit of a pop, obviously, with the rest of the market, but I think there's still that uncertainty there, and maybe a lot of the short sellers, closed out their positions thinking that Elon would announce something or say he stopped selling or something over the weekend, but that doesn't seem to be the case. So it could be that we are not in for a great week, especially if Elon needs to sell again. And you're going to see continued headwinds with the stock. So.
I'll be honest, the price Twitter in today's market is worth no more than $15, maximum $20 a share. And although it's great what he wants to do with it, but the point, you can't escape the fact that he paid 25 billion too much for it.
More than the GDP of many countries, just for this thing. It really means
incredible for Twitter. I mean, their holders, they just loved it. But
they must, exactly. But the thing is, it means a lot to him, and he doesn't think the same way as the rest of us do. So and he's been.
He has to have that attitude after paying 25 billion over. He can't right now for him to stay sane. He can't worry about I paid too much for it. He has to just go on with the mission to try to make it worthwhile again.
He was saying that he was working, between 60 and 80 hours a week just on Tesla and SpaceX and his other ventures, but this Twitter thing has now taken it up to about 100 hours a week that he's working, which is just insane. This guy literally works and goes to sleep. I do think that he will be able to get this Twitter situation resolved. However, it's going to take time. And with all this stuff that's happening, and if this next CPI print doesn't come out as the market hopes, it's going to be a terrible time for all Tesla investors. To be honest, I wish, that when in April when he made the deal with Twitter, just cashed out a decent amount of our position, because this whole Twitter overhang has been terrible for us. Yeah, it's been really, really bad.
It was coming. Sort of, you always saw how Tesla was affected by the shares of Twitter based on everything. And hindsight is a wonderful thing. Like, I wish I saw. I've always mentioned how I'm selling out all the time, and I just wish I sold out more. But this is the thing.
Yeah, the main thing is, can you hang on? Because Tesla obviously will recover. We just all need a lot more clarification on what's happening, and obviously he can't talk about it.
There was that one question. So what it is, Tesla's still trading at what, like 50, 60 times earnings or something like that, and like Mercedes-Benz is trading at 6 times earnings. So the real question is, obviously, I heard a response by Musk saying that their self-driving technology, their bot, their humanoid bot or whatever, and this is what's huge growth drivers which may command that multiple. But the market, how much will the market narrow these EPS between Tesla and these other automakers? Like, we've talked in the pod a lot before about how I've been waiting for my Mackie. Finally, I got it 2 weeks ago. And I genuinely believe, after driving that car, that whatever EV you get, you're going to love it. And I reckon if you buy a Tesla, you would want nothing but a Tesla. But if you've got a Mackie and you drive a Mackie, it's just such a nice car. You're like, I don't want anything but a Mackie. And if you've got another one, Ionic or a EQS or something, all of these cars are just so good that I don't actually think that there's one over another where you might go, you know what, but that one is just so much better that I want to give this one up and go for that one, because it's just the experience of the driving and that. And I think the main differences might be some of the infotainment, this and that, but not enough to sway you. But the thing is, Tesla has got the supply on their side. You can get a car in a couple of months, whereas everything else, you still have to wait 10 months to get it. Yep. So that's a huge benefit.
And the thing is, everyone talks about the legacy catching up. However, Tesla's lead is just accelerating. There's no way for VW or Ford or Mercedes to catch up, because if you think about just the amount that they're making, and they're increasing their production capacity by such a large margin, you can't catch something that's accelerating away from you faster.
That's right? The biggest thing.
So that is why they still command a premium, obviously with Elon as well. Until that changes, that thesis, can't. I think Elon didn't answer that question well enough, because he should have focused on the auto aspect of Tesla and saying how it's far superior than Mercedes in terms of their gross margins, because now we're going into this recession. So if you're going to be able to be lucky enough to be able to get an EV, now you could choose a Mercedes, you could choose a Ford, etc., but if we are in this recession, everyone's going to have to cut prices. Now, if you're barely making anything or you're losing money on those EVs, would you rather be in a position that, okay, I have to give up my 30% gross margin now, okay, I'll make 25, or I'll make 20, or I'll make 15. Now, if you make 15, if Tesla say, okay, we're going to do 15, their market share is going to grow exponentially, and they're still making money. Now, Mercedes, they are losing money. Now they're going to have to lose more money. So what boat would you rather be in? Like Elon tweeted just recently, it's going to be a tough time in 2023, but my companies are well positioned. Mercedes is not well positioned in EVs. That's the main thing.
I mean, the car that I got, I believe they probably broke even on it, because I got it for a great price.
Yeah.
I got the 2022 model. The 2023 model has gone up $9,000 in price compared to the one that I got. So obviously with that 9,000 increase, they're now making about probably 15% margin compared to my one where they probably broke even or had a loss. But it's all interesting. We'll see how it all plays out. But I mean, I think next week, and I think going into Christmas, it's going to be volatile again. I mean, I think inflation is going to go down. It depends on the pace. It depends on the rhetoric of the Fed. The thing is, the economy is still strong. That's the problem. I mean, we saw the Atlanta Fed GDP coming in. It actually started off initially negative or very low, and it's now gone to like a healthy 2% range. So the American economy is looking to grow around 2%, maybe. It's just the problem is the economy is just so resilient right now in spite of inflation. And so I think it's going to be a harder job for the Fed to get these prices down than we think.
Yeah, so that's why position yourself defensively if possible, and take money off the table if you can. Things might be set by the Biden administration to try to, tame the Fed and, at least give us some time for those rate rises to really take effect in the economy. But we just don't know what the future is. So it's better to have cash, because cash is definitely not trash anymore.
Cash is 4% on a 2-year yield.
Yeah, did you see? Yeah, did you see those? There's a whole bunch of tweets going around about all these crypto bulls that were going around to these countries. I think one guy went into South Africa and he was like tearing up the rand. He goes, "Your rand is worth nothing. Crypto's going to take over and all of that stuff. Cash is trash." And yeah,
El Salvador, it took Bitcoin as legal tender in the 50,000s. Now their currency has depreciated around 70% from when they, and bear in mind, they only did it last year. So in 1 year, their currency is almost as bad as the Zimbabwean dollar, but it's...
But if you think about what the mandates of the Fed, or the people who control the Fed, wanted, they obviously wanted these stocks to come down a lot. You see Powell getting very upset when a journalist told him that the markets are rallying on this, and then obviously he stamped hard down, saying that he doesn't mind over tightening and then turning on the money printer. If you look at all of the things that have happened now, with crypto being the next thing to fall, the only thing that hasn't really capitulated yet is rents. I guess that's the thing. And how is that going to happen, really? Because I think that takes up such a big...
If people can afford to pay it, because people are employed and they might be struggling. They might be paying 90% of their income just for basic living needs, but they've got a job and they can pay it. That's the biggest difference. Like, what the real problem is when you get all these joblessness and then all these guys that are losing their money, losing their jobs in tech, they're getting generous severance, and so they'll be fine. They're not going to have a problem. So
this is the thing. I mean, like, how much do they all have to tighten to then affect rents? Because if they do, I mean, that means our economy is going to be basically... It's so hard, because you have to think about, do you want to be the leadership over a thriving economy where people are doing well, or do you want it to be like a disaster of an economy, where, okay, now we've got this 2% magic number back, but all these people are suffering? So it really depends. And the Fed, all the 12 members have been unanimously deciding these rate rises, but it seems like in the next one, hopefully we have a few dissenters and a bit more of a kind of a more rounded discussion on what actually is going to be the good course for the economy in general, and not just looking at that one figure. But I know they obviously have their mandate, but they have to look a bit beyond, because this has worldwide ramifications, what that happens to the US. But one thing you've seen is the US and pound and the US euro come back to a bit slightly reasonable levels.
And that's been good. But anyway, so before we end this, so looking into this week, what are you looking out for? What are you looking to trade? I mean, for me, short in energy, the stocks, especially ExxonMobil hit a new, I think, all-time high, got to like 114, 115. We've seen all of these oil stocks so massively outperform, and they're all trading at highs while the rest of the market has been tanked. And the thing is that it's obviously partly due to the strength in crude, but crude has come down a lot from the all-time highs. I mean, the year highs, and then China opening up. But I still think that these oil stocks are due for some type of correction. So I actually, on the portfolio, I lost out on one Exxon trade, but I've just put on another one last week. And I'll just be looking to try to just find some trades where I can short the XLE, XOM, CBX. And that's what I feel like is the best risk to reward play right now, even though the momentum is very strong. And also, we have seen a big bounce in a lot of these other names like NVIDIA as well, also looking to just peter out of that position too. We've gone from 113 to 160 in quick haste. So, I mean, this is what I'm looking at. But again, next week now, it's going to be interesting. Most of the earnings are done and dusted. So we haven't got any real catalyst in terms of corporate news now since all the earnings are out. Let's just see if we can build on this rally. Hopefully we can. And what about you?
Like I said earlier in the pod, I'm a bit bearish. My main aim is to kind of offload anything that does pop. Just have a bit more cash that if things do go bad, then I am able to buy. Because Tesla at 175, I wish I just had a bit of dry powder, but I have nothing right now. And at that point, I just feeling a bit too much fear to put something in. But again, this is where I have been successful in the past buying when things have been really, really bad. But I think, just a lot of hopium in my, over the last 6 to 8 months or something like that has kind of put wool over my eyes. So I think right now is a good time if we do have this kind of rally. Just sell a bit every day that we have something green. But other than that, do nothing in terms of buying.
It'll be interesting to see how this crypto unravels. If Bitcoin is still going to keep on plunging, it's in the 16,000 level right now. Talks like could go, the technical levels back towards 12,000. If it goes to 12,000, that's not going to be pretty. I'll tell you that. But we'll see. Let's just see if they can nab Sam Bankman-Fried, because what he done on the surface, from everything I'm reading, is just outright fraud and should be in prison for a long time, playing with people's money like that. I don't know how many people have been affected, and hopefully those who have managed to get their money back if they haven't already. Like I had a little bit in FTX, but I didn't have much, but still, it's potluck whether I get it back or not. So we'll see. Well, let's hope for a good week. If you liked what you heard today, please like and subscribe.
We'll see you guys in the next one. Thanks.